Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and if you thought Friday afternoon's market trade was crazy, it definitely was. We're going to dive into what happened, all the he said, they said type of discussion with the tariffs and what that meant for the market. But we also had everybody waiting for that cattle inventory report to come out. So we're going to break down that report first and then talk some tariffs and market trade coming up right after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again. Joining me today is going to be David Ericson. David, of course, is with Ag Optimus out of Akron, Iowa. And got to dive into this much anticipated cattle inventory report. We didn't get the mid-year report that we always anticipated. So I think there was a little extra pressure maybe on these numbers. Initially, what was your takeaway on what you saw?
Well, initially just kind of looking at the numbers, all cattle and calves being at 99%. Compared to the average estimate, really not a big change there. There was an uptick in the annual calf crop. Overall, that came in at 100% compared with the average estimate of 98.5. The other big thing that I took away were beef replacement heifers. We have talked a lot about when are we going to start rebuilding this herd? What's that going to look like? What's the time frame for it? The market was kind of anticipating that a little bit when you look at the average estimate of 101.3 and we only had 99%. Well, I think simple math will tell you that a lot of those beef replacement heifers that people might have been anticipating that were going to be beef replacement heifers, they just rolled into the calf crop. So that's why the calf crop number is bigger than what the market anticipated, but the beef replacement number is also smaller. So overall, I would say that the report is pretty friendly to the feeder cattle side of things, just because it shows that we are not growing the herd at any kind of rate, and it looks like we're putting that on the back burner now. And a lot of that is because of how strong the market is. I've watched numerous sales across the country, and there's been a number of heifers that have come in where, the auctioneer talks about, they planned on keeping these for replacements. They decided not to. So you're seeing more and more of that. And even if it's a group of 20 at a time, across the country, if that is happening, which I suspect that it is, it's really hard to turn away what the feeder calves are bringing in the market right now. I suspect that that's happening, and you add, even that 20 at a crack or 40 at a crack, whatever you want to say, that really adds up. So I think that's why we've seen some of those numbers. And, forward looking, it looks like we have no intention of rebuilding the herd or getting the herd bigger than it was last year anytime real soon.
Did that surprise you, though? Because I think there was some optimism out there that we might have seen just a subtle hint to us going back on the upswing on that.
Yeah, it was a little bit of a shock. I did think that we were going to see an uptick in the beef replacement heifers, just because I think that we're starting to get, and I talk about this a lot, what we have seen in this cattle cycle, in my opinion, and I'm kind of involved in every facet of this, but we've seen feeder cattle kind of run up, and fat cattle have played along, and it's bailed out a lot of producers. The one thing that we haven't seen, but I believe that we are starting to see, is the uptick in what the bread market is bringing. For the last 2 or 3 years, I thought that the bread market was pretty undervalued overall. But it seems to me, in watching sales and, heifers that I bought for my own operation, that they have kind of started to catch up a little bit with what the feeder cattle have done and what the fat cattle have done. So yeah, for that reason alone, I think that the fact that the report shows what it showed, and there wasn't a lot of beef, there wasn't any extra beef replacement efforts kept, and actually 1% less than a year ago, kind of surprised me.
So what do we think the market, or how is it going to lean come Monday? Because I mean, obviously we saw a nice rebound on a Friday in this cattle complex. Can we still keep that momentum going, or is it to the point now our cattlemen and women need to start thinking about things falling back a little bit? I know it's a loaded question, but I'm just curious.
Yeah. So my thoughts are, I have been cautiously and probably a little too cautiously optimistic for quite a while. I've kind of nudged guys to take advantage of the rally, and the steam engine just keeps on rolling forward. It just keeps pushing higher and pushing higher. I thought it was interesting today. It was almost like someone knew that that beef replacement number, or the heifer, the feeder cattle numbers in general, were going to be friendly. So to me, I think that there is probably a little more room to the upside, and I suspect on Monday, depending on what this tariff situation, how that plays out over the weekend, which we can talk about later, depending on how that turns out, I think if we are purely trading on the cattle inventory report come Monday, that we will be a little higher, and we can probably go up and retest and or make new highs for this move.
All right, let's talk about that tariff. Midday, even before you and I talked on the closing numbers on a Friday, Reuters, we all know who it was, came out and said, oh, it's going to be possibly moved to March 1. And that seems to be what the market gravitated toward and kind of lobbed onto, only to have the White House press secretary say, no, it's still going to be February 1st. As you and I are recording this, obviously it's February 1st, but let's talk about how it kind of caused some trade reaction.
Yeah, you want to talk about throwing a monkey wrench into an already wild and crazy day. That definitely did it. I seen that report come out, and I thought, well, okay, let's see. Okay, we don't exactly know when these are going to go in, but then shortly after that report came out, like you said, the press secretary came out and said, everything is still as planned for tomorrow. So obviously she got marching orders from above her to make sure that narrative got within the cycle. So as it sounds right now, there will be tariffs that are placed. I think it's 25% on Canada, 25% on Mexico, and 10% on China, I believe. The big focus is obviously what are we going to do to our neighbors to the north and the south. And the probably even bigger question is, how are they going to push back? How are they going to retaliate? What is their negotiating strategy going to be moving forward with these tariffs? And I think that the biggest reason why President Trump is pushing forward with Mexico and Canada specifically is it's more of a border security or a health security. He is concerned that a lot of drugs are flowing in from Mexico and Canada. So he wants to try and do everything that he can to stop that drug flow. Obviously, those drugs coming into the country probably aren't taxed anyway. So it's tricky, but it's definitely, he is trying to take a stand and do what he can to stop that flow. Now, the very interesting thing that is going to come out of this, I think, is it's never really stated what exactly there's going to be a tariff on. Are we going to include food products? Right now it sounds like it's just kind of a blanket 25%, but I think that is something that when they get to the negotiating table that they will talk about doing. Now, everyone has their own ideas of what this is going to do to the market, and I've heard a lot of wild projections, a lot of wild theories, hypotheses, whatever you want to say. at the end of the day, I think that on the meat side of things, Mexico's pork production is right around 3.5 billion pounds, but another 3.1 billion pounds are imported, and we account for 85% of that. So that could put a damper on the hog side of things if Mexico retaliates. Canada, they're not a real exporter of beef, and they're even a larger net exporter of pork. So overall, it sounds like both of those countries are in pretty good positions as far as, what it looks like, how they source their meat or what they do in order to feed their people. So we will have to keep an eye on it. And I will just say, I'll be the first to tell you, I don't know what the impact's going to be overall. And I honestly think that anyone that tells you that they do, is either really confident and really intelligent, or they're lying to you. One of the two.
So as we get ready to wrap up today's discussion, in a nutshell, Sunday night's trade for the grains, Monday's trade for the livestock. What are you thinking? What should we, as growers and producers, be looking towards?
Well, I think first of all, we need to see if these tariffs go into place. As far as the grains, since we've talked about the livestock enough. As far as the grains, one thing that I would be cognizant of on the corn side is obviously Mexico is a big buyer of our corn, and they use a lot of corn down there. Excuse me. I don't believe that they can effectively outsource their imports of corn from other areas, mostly because South America continues to have weather problems. So I think that you kind of seen that go on throughout the day. And, as you kind of watch the corn market, it did close lower and it stayed under pressure, but it came a long ways off of its lows. And same with the wheat market. Now the soybean market, actually, Canada is a big exporter of soybeans to the United States for various reasons. So I think that it would be pretty friendly to the soybean market overall. And you can see that the soybean market was the first one that kind of ignored that news right away from the overnight. So I would suspect, it's going to be one of two scenarios. I would say the first scenario is that the tariffs go into place and they include food, so on and so forth. I think you will see an overreaction on the corn and the soybean and the wheat. And I think that, they will be under pressure on Sunday night, but I think that they will ultimately rebound and recover by the end of the day come Monday. The other scenario is that the tariffs don't go into place. The Reuters guy gets left off the hook because at the end of the day, he was right. They are going to be, they're not going to be put into place on March 1st. They're leaving 28 days to negotiate. But President Trump, being President Trump, just wanted to control the narrative himself. If that scenario plays out, I suspect that the grains recover and, probably trade higher on the Sunday night trade.
All right. Sounds good, David. Thanks for joining us this week. A quick reminder to everybody, commodity futures and options involve a substantial risk of loss, not suitable to all investors. Information on the show is provided for educational purposes and not intended to influence legislation, government policy, or action. And that's been another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.